The pre-markets have just opened and there's not a lot of change, although everything's going in the right direction. Equities are up, bonds are up. Well, Bitcoin is down, but everything else is going the right direction. So Elon has been very, very active on X the last few days, and this is another one of the comments that he made that I thought was valuable here. He says XAI will soon be far beyond any company besides Google, and then significantly exceed Google. He says companies in China will be the toughest competition because they have so much more electricity than America and are super strong at building hardware. So, because of their factory capabilities and because they've got this oversupply of electricity right now, again, please keep in mind when people make these comments about China, per capita, they don't have more electricity than America does or more energy than America does in terms of production on a per capita basis, not even close, probably about half. But in terms of gross amounts, because they have, 3 to 4 times more people than we do, they have maybe double the amount of total energy production. And because they're a growing economy and pulling out of the Stone Ages, and I know that's a little bit hyperbolic, but in other words, China, while they may be doing very well and getting very modern, they still have a very backward economy compared to ours, and it doesn't require as much electricity. So they're able to use the amount of energy that they are creating and producing very, very rapidly. They're able to use it for these purposes, where America, we got to share it, with the air conditioning. All right. So then Elon Musk also said yesterday, this bears repeating. You've probably already heard about this. I might have even said it on the show this morning, but he was replying to James Dalma and he said, version 14 of FSD will be better than human for sure. I don't know if it will be 10x, which is what James Dalma had suggested, but he says it probably will be, he says maybe 2x to 3x. And this morning on the show, I pointed out how critically important that is. And if you didn't see that show, you're definitely going to get a card later, and you may want to go back and check it out. Elon Musk also says, well, so Sawyer Merritt says, what do we got? Okay, Sawyer Merritt has this. He says, Uber's CEO has a new interview out on which the approach to autonomy, he's talking about which one will win. And he says that Tesla's camera only is one version, and Waymo's multi-sensor is the other possibility. And the quote is, in the near term, I think it's going to be very difficult. And Elon would tell me I'm wrong to build a camera-only product that has superhuman levels of safety. After Elon has just said that version 14, which is coming out in the next few weeks, is going to be 2 to 3 times the level of safety. At some point, will it be possible? Quite possibly, yes. Solid state LiDAR is only $500. Why not include LiDAR as well in order to achieve superhuman safety? All of our partners are using a combination of camera, radar, and LiDAR, and I personally think that's the right solution. But I could be proven wrong in the next 5 weeks. He didn't say that. I added on in the next 5 weeks. I think this is it's really brave of him to put this out there just a few days before we're going to be seeing version 14 we're going to see safety drivers removed in the vehicles in Austin probably any time now, maybe within that same period. Elon also says, he says, having thought about it some more, I think that 50 million H100 equivalents that number is just about right. Just in 5 years, we'll have 50 million. Now remember, 2 years ago, they had none, roughly 2 years ago. Right now, I think the number is 540. That could be off a little bit. It's around there, I think, is how many are. And I think those might all be operating together, or if they're not, very, very soon. That's in 2 years. And that puts them far beyond anybody but Google. And then he's saying that by the end of this year, early next year, he's going to have 1 million H100 equivalents there in Memphis. And now he's talking about in 5 years, 50 million. Now, I don't know if it's going to take as much space as that million is going to take in Memphis. It's taking up a lot of space. And you're seeing, what Sam Altman and others are doing. Who was it said the other day? It was a it wasn't Bezos. Anyway, one of the mega scalers was saying that they were going to build, I think it was Meta was saying that they were going to build a data center that would be like a fifth or 2/5 the size of the entire island of Manhattan. Anyway, then Elon finishes this off after talking about 50 million of these in 5 years. He says eventually billions. So 50 million to 500 million is another power of 10. And then he's talking about double that or more. I'm really beginning to think that Brian Wong might be right, and he might have to do these on Mars. All right, Motley Fool says, before we get to the Model YL, because the headline was about the Model YL, he says, before we get into the details of that, let's look at exactly how dire things appear to be in China for Tesla. During the second quarter, Tesla sold 128,803 electric vehicles. That's pretty dire, which was a 4.3 decline from the first quarter and down 11.7 from the prior year, which still put it, I think, number one in EVs in China and made the Model Y the number one or number two best-selling car in the world. Anyway, he says, to complicate matters further, after making a marketing push with discounts and incentives, Tesla sales had a minor resurgence in June, but fell back lower again in July. And he doesn't, of course, mention about the changeover he mentions the fact that there's a new model, but he doesn't mention that there was a changeover in January, February, March that impacted all of these numbers. Worse still is the fact that the sales declines came after a refreshed Model Y lineup was available. Weaker than anticipated production during the first quarter weaker than anticipated production? No, everybody anticipated it. During the first quarter led to disappointing sales, but once production was up to speed, deliveries still failed to rebound. Weakness in China, of course, the economy there's pretty weak too. Weakness in China helped drive Tesla's global deliveries down 13.5 during the second quarter, the worst quarterly decline in more than a decade. The environment isn't getting better, with China's domestic brands continuing to unleash price cuts. One recent example was NIO, with an across-the-board price cut on its vehicles equipped with long-range batteries by lowering the price of the optional 100 kilowatt-hour battery. What is the Model YL? The question they asked this. Tesla is facing a slowdown in one of its most crucial markets with the previously mentioned price war and slowing economy. There you go, slowing economy in China. One way the electric vehicle maker thinks it can make up some sales ground is with the newly launched Model YL. The new version of the Model Y is a stretched six-seat version of the popular SUV made for Chinese buyers. The reason is pretty basic. Chinese customers prefer larger family cars because they have such large families. I don't think so. I think it must be because they're one or two kids, which is kind of the rule. Not the rule anymore. You don't have to, but they've just continued to do that, which is why their population is shrinking already. Anyway, I don't think they need it for large families. I think they need it for a couple of kids and the neighbors or something. Anyway, but they like these big cars. That's the truth. So a 6-seat layout, more leg room would all be great. The question is whether or not the Model YL is priced competitively enough to move the needle on Tesla deliveries. Its price tag is higher than the 5-seat variant at roughly, which would make sense, but still more competitive than the 400,000, 55,700 that many analysts were expecting. So it beat the price of what people were expecting. The Model YLs is aimed at families who want extra space without being forced into a higher price luxury option, but it will have growing competition because 6-seat SUVs in China become a hot segment. So it's a hot segment and it's a good price. So it sounds like it will sell. I don't know what they're talking about. All right, what all this means, he says. While this is somewhat of a no-brainer move from Tesla to expand its segment coverage, especially considering the 6-seater's growth and popularity, it's unlikely to seriously move the needle for deliveries in China. Long-term investors should stay the course, but be wise to prepare for a few bumpy quarters. I hope they read my article this morning, which should change their mind. I think nobody knew about this IRS thing. I continue to talk about it. I'm the only one talking about it. Nobody else has mentioned. This is a huge So one guy responded in the comments. He says, well, what's the big deal? Well, the big deal is everybody thought you had to take delivery by the end of September. And the fact that you only have to order by the end of September means that it's as if they said, now you only have to take delivery by the end of December. They added an entire additional quarter of potential sales of the 𝐒𝐮𝐧𝐝𝐚𝐲 models at full margins, at massive margins, because they're getting the $7,500 discount. All right. Anyway, that's the end of that story. Starship. I asked Grok, I said, hey, what are the main 10 things that Starship wants to accomplish today? So here are the 10 major things that they want to do today. They want to refine the booster reusability. They want to test the Super Heavy Boosters 16's flight experiments to gather data on off-nominal scenarios, aiming to improve structural integrity and landing reliability for future reuse. They want to test the upper stage durability, ensuring the ensure that ship 37 survives atmospheric re-entry, testing those new heat shields. That's the big deal, and the catch fittings for Block 2 Starship reliability. Number 3, they want to enhance the engine performance. They're going to conduct landing burn with 2 center engines and 1 middle ring engine on Booster 16 to validate backup engine functionality. Number 4, they want to improve the heat shield design. They're going to test experimental heat shield tiles, including active cooling, to protect Ship 37 during reentry, critical for crewed missions. Number 5, they want to achieve controlled splashdown. They're going to aim for Ship 37 to perform a soft water landing in the Indian Ocean, refining the precision landing capabilities. Number 6, they want to advance propellant transfer. They're going to prepare for in-orbit cryogenic propellant transfer demonstrations, essential for deep space missions like Artemis and Mars. Number 7, they want to increase launch cadence. They're going to target faster turnaround for Flight 10 and beyond, aiming for 1 launch every 3 to 4 weeks to meet 2025 goals. Number 9, 8, they want to supply the Artemis program. They want to validate Starship's human landing system for NASA's Artemis 3 mission. Is that Artemis 3 mission, targeting a 2027 lunar landing, 2027. Number 9, enable Mars mission. They want to lay the groundwork for uncrewed Mars launches in 2028, testing the technologies for eventual crewed missions in 2030. Just 5 years away. They want to develop version 3 Starship, prepare for version 3 Starship debut by year end, enhancing payload capacity and deep space capabilities. Brian Wong put up a big long post also talking about the fact that if they didn't list it on this list, but if they can get these dummy satellites off of, they're going to test the Pez dispenser thing, they can get these new, larger satellites off the ship and into orbit, then that's going to reduce their cost to orbit by, I believe, by 5x. And if they can land if they can end up landing both halves, not this trip, but eventually, it will reduce their cost to orbit by per pound per kilogram by 10x, so by 5x, even if they lose the top. Even if they lose the ship. All right, this is Randy Kirk. By the way, hit like and subscribe and notify. Why would you want to hit notify? Because you want to be reminded that there's going to be another show tonight at 7:45. You don't want to miss it. And then it'll also remind you to be here all day tomorrow for 3 shows on Monday, Tuesday, Wednesday, Thursday. Every day there's 3 shows. I know that's hard to keep up with. I know, but watch as many as you can. Nvidia reports this week, Tuesday after the close. That is where everybody's paying attention to right now. What is Nvidia are they gonna beat by a lot again? What is their guidance gonna look like? Everybody's paying attention to what Nvidia is gonna say this week. And then we'll have a bunch of smaller retailers reporting this week. A lot of the mid-sized retail chains and people, I'll be paying a lot of attention to that. I'll be reporting to you because it'll give us some more indications of inflation. It'll give us more indication of tariffs, and it'll give us more indication of where is the consumer. It's one thing if they're walking into Home Depot. It's another thing if they're walking into Target. It's another thing if they're walking into Walmart. All of these companies have different strategies and different consumers and different reasons why they may or may not be spending money. So far, the consumer looks just fine, quite frankly. All right, on Monday, we've got new home sales. That'll be the first thing out of the gate, and we got 627,000. Last month, they think it's going to be up to 632. So I'm sure the new home salespeople will like that, the people that are selling new homes. We've got interest rates coming down. That's going to, mortgage rates are already down. They're at the lowest they've been all year, almost at 6.5. Very, very close. By Monday, they might be under 6.5. On Tuesday, we've got some presidents and governors of the Fed speaking. That'll be interesting. Maybe this week they might be throwing some cold water on our expectations. We'll see what happens when these people speak. Durable goods orders are coming in on Tuesday. Last month they were down 9.4. The people that are guessing are guessing it'll be down only 4.1% this month. Yeah, maybe we'll see. Last month durable goods orders minus transportation were actually up 0.2, and nobody's willing to guess. They couldn't find a single person to make a single guess about what's going to happen this week. That was also true of the S&P Case-Shiller Home Price Index, which was showed home prices growing at a 2.8% rate, which is way down from what it was just a year or two ago. And again, nobody willing to guess. And then consumer confidence last month was showing at 97.2. This is the one that I pay a little more attention to than everybody else pays attention to. The University of Michigan consumer, yeah, that other one. But the consumer confidence is the one I pay more attention to, and they're saying it'll be down a little bit to 96.5. Then we get nothing on Wednesday. Thursday, you get initial jobless claims. They think those will drop down a little bit more, showing a solid labor market from 235 last week to 230,000 this week. Then we got a GDP's first revision. Now, if you think that economists think that the economy's got some problems, then why are these economists all thinking that instead of 3.0, which was the GDP from last quarter, that they think it's going to go up to 3.1? I don't know. Remember, we're talking about history, not current. But right now, most people think it's growing around 2.5. Pending home sales last month was down 0.8, but this month they're thinking it'll be up 0.3. So home sales, even, it's summer. This is when they're supposed to sell. And then Fed Governor Christopher Waller speaks. On Friday is when we get everything else. We get personal income, which last month was up 0.3. The previous month, I think, was up like 0.5. And they think it's going back up again, 0.4. This is a critical one. This is so important. If personal income is going up 0.4%, that is almost 5% a year. Okay. And that's kind of where we've been, around 5% a year. And we've got inflation at even 3%, and it's actually less than that. That means real personal incomes are going up. This is the entire goal of the Trump. That's the number one focus. The goal of the Trump administration is for real income to go up. Personal spending last month was up 0.3. They were thinking it's going to jump up 0.5. The consumer's in trouble. They think it's going up to 0.5. That's 6% a year. PCE index comes out on Friday also. Last month, we saw a 0.3% increase. Inflation, yeah, whoops, PCE index, headline number, 0.2. That sounds pretty good. PCE year over year, 2.6 last time, 2.6 this time. We'll see. If those numbers come in like that, that should be good. That should help us continue to believe that the Fed's going to cut. Core PCE index, last month 0.3. This month they think it'll be 0.3. I don't think that'll hurt. It's not good. It's not where we want it to be, but it's not bad. And they think the core PCE year over year will go up from 2.8 to 2.9. Once again, that will not change the Fed's mind if that's where we are. Now, the fact that the economy is doing this good, that could change the Fed's mind. But I think at this point, that is baked in. The cut. Advanced U.S. trade balance. Everybody will be paying attention to this week. Last month it was a negative 86,000. I'm sorry, 86 billion. No, wait, what? 86.0 billion. Yeah, that must be annualized, I guess. I'm not sure. I'll have to look that one up. Okay, and nobody's guessing, so I can't even tell. But my guess would be we're going to continue to see the trade balance be way less, way more in our favor than it has been in the past. Advanced retail inventories and wholesale inventories, as you know, I don't care about them, Last month, they were both up a little bit. Chicago Business Barometer, 47.1 last month. They're thinking that drops down, which would be different. Like the Philadelphia Fed was up, and the overall Fed seems to think things are going well. So I'm not sure why they think the Chicago Business Barometer will be down. Consumer sentiment, this is the other one, the word that I couldn't think of a minute ago. Consumer sentiment, 58.6. They think it stays the same at 58.6. That is the guess, okay? Fortune magazine they did everything they could. They tried as hard as they could to smear the president and his financial plans, his Trumponomics, whatever you're going to call it. So, that's what the mainstream media does. That's what they're in business to do. The headline said this: Trump may want lower interest rates for consumers, but it sure is convenience for the national debt. He's also, creating two. The national deficit, I'm sorry. No, national debt, he's creating two. So in other words, the idea here is the tone is that the president is self-serving in some way, because as much as he might want to cut the consumer debt and make it better on the consumers in terms of their borrowing power, that what's really back there in the back of his mind is, hey, how can I get this interest rate down on the consumer debt so that I can get my overall interest rate, I can get my overall spending down on the budget, and therefore that's going to be better for me. The president of the United States, I'm going to feel so much better. I'm doing it for myself. What absolute nonsense! It's not going to help Trump at all. I mean, it might make him feel good. It might make some people go, "Hey, good job, Trump." But that isn't going to help him. Who's going to help? You, me, everybody. If we get the interest rate down on the debt, and therefore we get the budget down, that's going to actually create a hamster wheel here. It's going to cause the interest rate to go down even more because we've reduced the debt. No, it's an extremely good thing. It's a super big positive. It is certainly a reason why Trump would want to do it, is to reduce the amount of money that we're spending on interest. And what is Fortune even thinking? The article spends 2/3 of the words in the article dealing with mortgage rates, which are likely to be impacted, but there's no guarantee. If the Fed drops interest rates, it doesn't mean mortgage rates go down. You saw last time they dropped by 50 basis points or whatever it was at the end of the year. Is that 50 or 100? Mortgage rates went up. So there's no guarantee. This is not any correlation. The correlation for mortgage rates is with the 10-year Treasury. And the Treasury doesn't absolutely go the same way that the Fed goes. So it might help, but why did they spend 2/3 of the article talking about mortgages as opposed to the things that it will actually help? So what will help? It'll help the working poor. It'll help the middle class. It'll help small businesses and mid-cap businesses, and it will help regional banks. Those are the people that are going to be helped if the federal interest rates go down, if the Fed lowers interest rates. But it never says that in the entire article. Never talks about it at all. Yeah. So it says it's just a horrible job by Fortune magazine. But then, you kind of come to expect that. The Bureau of Labor Statistics released its most recent consumer expenditures report in 2024, outlining spending for 2023. And according to the data, retirees 75 or older spent $53,000 that year on average. So for a couple, they're spending $106,000, 10,000, almost 9,000 a month. 9,000 a month. That's pretty close to my budget. This is fairly sizable reduction from the next lower age budget, those people 65 to 74, which spend an average of $65,000 annually, or $130,000 for two people. I don't know. I think these are high. Over 80, this drops to only $49,000. All right, I'm looking forward to it. But I bring this up for one reason. First of all, it might be interesting for you in terms of what you're spending compared with what they say. I think it's high. I think it's crazy. But what I'm going, because I know what I'm spending, and I know not everybody that I know can afford to spend that much. All right, let's. But why did I bring it up? I brought it up to say that the aging population is impacting the overall GDP. It's impacting, the spending on things, okay, which is, the manufacturing side of the business. It's something everybody's got to take into consideration. Later family formations, later purchases of a home, later marriages, and aging baby boom, both of those things are impacting the purchase of things as opposed to experience. And it's just key. It's very, very important in doing an analysis. Okay, overnight, the Truflation numbers were going up a little bit on the overnight numbers of $2.12%, but the year over year is still staying way under 2 at 1.94. You see, one of the things that's going on now the next month is last year's numbers are easier to beat. July was the last month where there was a trough, and then during the Biden administration, the inflation rate started going back up again, according to Truflation. So now each month for the next 6 months, it's going to be easier to have the inflation number be lower on a year-over-year basis, which is how we base this entire thing. When the CPI and the PPI and the PCE come out, they're looking at a year-over-year analysis, a comparison. Well, if last year's number was going up and this year's number is flatter, then it makes it lower. Does that make sense? Okay. All right, let's look at where things actually ended up here. I know I said a minute ago that, well, no, so we're staying very, very, very narrowly neutral here. They were up initially, now they're down. So the equities, Dow futures are down 0.03, S&P future down 0.06. Did I say the O there on the first one? Dow 0.03 negative, S&P down 0.06, and the NASDAQ down 0.10. So pre-market right now a little bit down, and they were a little bit up. You've got bonds at negative 0.2%. That is where it's been all afternoon since I started looking. We have got the wait a minute, oil is up a tad, basically flat. We've got natural gas also down a little bit, a lot actually, 2.22%, down to 263, continuing to fall. Yeah, I think I got nothing more to say about that right now. All right, we got gold flat, but still sitting at 34.13. Silver down a little bit, 0.43 at 38.89, very close though to where it's been. And copper also about where it's been at 4.46. Very, very, very flat there for quite a while now. You've got the dollar mixed, and Bitcoin is the one I told you, although it's not down as much as it was, it's down 17.39, sitting at 113,326. All right. Well, of course, it's still an hour. I'm shooting this at 3:42 in California time, which means we're still over an hour before Robinhood opens. But I will try to remember to bring you what Robinhood is saying in my later show tonight at 7:45. So look for that show. It's going to be great. And speaking of great, though, this morning's show where I gave you 10 reasons why Tesla is likely to be breaking out now and just going straight up. Well, straight up, never, but you know what I'm talking about. This is 10 reasons why we are on the way to the moon. If you didn't see that yet, there's the card. I think you're going to like it. That's all I got for you right now. It's been great talking to you.